And welcome to an episode of Deal Talk. I'm Deal. Let's talk. My guest of the evening is a former investor. Now he's a blogger. He's an author. Ladies and gentlemen, give a warm welcome to Paul Musson. Welcome to the show. How are you?
Very good deal. How are you?
I'm good. I'm good. I'm intrigued. I'm motivated to talk to you and hear your story and what you have to offer. I was watching your clips on Instagram. Very informative. Very educational. I love that, especially when it comes to investments.
Well, thank you. Appreciate that. That's the whole point of what I've been doing is to, empower people with
Yes.
with truth, with knowledge, because I think the average person is very smart,
Yes.
particularly when it comes to determining what to do with their own hard-earned capital. You know,
Mm,
whether to save it or to spend it, how much to save, how much to spend, what price they should pay. People are very smart, but many don't speak the language of the monetary system or economics. And so they're not able to contribute. It would be like if, you're English and someone's talking in Greek, you can't contribute, not because you're not smart, you don't speak Greek.
mm.
So in effect, I'm trying to teach people Greek, right? But in the
Yeah. Yeah.
monetary system, so empower them and all these amazing smart people can make a difference.
I'm into that. I'm into that. What inspired you to take this route? Because you're a veteran in the investment market, right? You have your own firm, consulting firm, but now you're an author, a blogger, and that difference it's a different space because the consult is it's a business, right?
Yeah.
But now you're dedicating yourself to be more and provide value information to the modern world.
Yeah. Yeah. So it was a path that I did not intend. And I loved my career as an investor. And when I first started, I was terrified of having to make a presentation to clients to get up on stage. So my clients would be financial advisors, financial planners, stockbrokers. And yeah, so when I first started, I was nervous as hell and shaking and I got through it. And then as time went on, I started to like everything, right? You get more relaxed and you get experienced,
Hmm.
but I really started to enjoy it. And at first, I was just trying to impress people because I thought that's what you needed to do to get the sale. Like impress them, make them think that you're smart. So use big words and all this jargon that maybe they didn't even understand. And so they might not have understood exactly what my investment style was and what to expect from me and my team in different market environments. But my hope was that I would sound smart so they give me their money.
Yeah.
And and then I found that over time I was like stumbling over myself. I was contradicting myself because I was not being intellectually honest and trying to help them understand who I was and what I would do to empower them to make a better decision. I was just trying to get their money.
Yeah.
And so if I empower them to make a better decision, that decision might mean that they don't give me their money or their client's money. But that's a good outcome because it means that I'm not right for them,
Mm.
right? They're grown-ups. Let them decide whether me and my team are right for them or not. I don't decide that for them. I just inform them about what it is we do. And once I decided to do that, it was so empowering and it was so liberating. There's an old saying, I forget who said it, but if you always tell the truth, you never have to worry about what you said,
Mm.
you know? And it's really nice not having to worry about what you might have said to one person and maybe you said something different to somebody else. No, I don't have to worry about that anymore because I'm just telling the truth. And and seeing the impact that has on people and how much because they're all smart people, and how much they appreciate the fact that you're being brutally honest with them, and now they can trust you. And and then over the years, I really focused on how I was communicating to our clients. Like, will they understand this or not? No, probably not. Let me back up a bit because they don't need know these other steps here. And so I build a story, I use analogies, I build a foundation of strength for them to build their understanding of what's going on, not just with us, but what was going on in the world. And I was getting very angry about what central banks were doing in the run up to the global financial crisis in 2008, 2009, which we can talk about. And then, in particular, the response to it. And so, when I would talk to my clients about this through the years, many of them, well, not many, some said
Yeah.
that, Paul, one day you should write a book about this. You're really the only one that we know of that talks about it with such passion, and you really want us to, and you've taught us so much. So it was always in the back of my mind. And then one of my bosses said the same thing, and then just writing and empowering people just became my real passion. I still loved investing, but when you're investing, it's a lot of work.
Hmm.
And yeah, so if I really wanted to write, I really needed to leave the investing world. And so I left my company, which was Mackenzie Investments, great company, back in 2023. So just over 2 years ago. It was
Wow.
March.
After how many years of
I was at Mackenzie for 23 years.
wow.
Yeah,
Wow.
yeah, they were great about it. The company was great. And I had a great team. Like we built this team, me and my team, we built it together through the years. I was the team lead. Um, but you're building a succession plan because you want all those things that you've done over the years and all the things that you've struggled through together as a team, and you figured it out and you made some mistakes. Okay, we won't make that mistake again. And now we know, and you build up your own culture within your team way of doing things. You want to ensure that that's going to continue. So you have to make sure you're hiring very smart people and people who are smarter than you, who are going to make it
Mm,
better. So that's what I would do. And but if you're successful in your succession planning, eventually you succession plan yourself out of a job, And so
yeah.
they're doing great. And now I got to focus on, and I'm still involved with the company, and they've been great about it. But I get to focus on my blog. And I had started my book in 2019, but I could only write on vacations because even on weekends, you know what it's like during the week. You're
Yeah.
busy,
Yeah.
and then the weekend, there's all this kind of stuff you got to do, and you need large blocks of time. And so that, leaving Mackenzie and that enabled me to finish the book. And then trying to find a publisher, which is another thing. I mean, it's one thing to write a book, it's another thing to get it published, and another thing again to get it read.
Yeah.
And so it's a lot of work. And so far so good. And I started my blog in 2022, and it's called Paulitical Economy. Instead of political, Paulitical with my name.
Yeah. I
We
love
like,
the wordplay.
yeah, we like puns in our house. And I started that in 2022. And because I'm reading all kinds of financial press and whatnot. And I figured, you know what? I take notes every now and then. I'm just going to start sending this to my wife and my three daughters so they know what's going on in the world, economically, business wise. And I tend to stay away from geopolitics, but I'm putting it into easy to understand terms and having some fun with it. And then my daughter's friends, oh, can you put my friend on it? My wife, oh, can you put my girlfriend on there? Blah, blah, blah. And then so it was going to all these people. I didn't even know who they were. And then I get emails out of the blue. I've been reading your blog. I love it.
The
Can you
blog.
put me on your list? And then, look it up. It's a vice chairman of some investment bank, or it might be a teacher. Like I have no idea who it is. And I've just had tremendous feedback uh, from people who they're entertained by it, but they also say, "Yeah, I'm learning stuff, and I never feel like you're talking down to me." And
You're
so,
not using the big words. You're not,
exactly,
yeah.
I'm not trying to impress anybody. I'm just trying to have fun. And yeah, so that's how I got to where I am today.
Wow. Amazing. Now you mentioned like economists, right? Before I get there, I want to ask you, in your 20 plus years, have you been able to decipher what is considered to be a good investor? Because in this and I ask because you're experienced, right? Because we live in a digital media world, right? And where you have always somebody trying to teach you this is the best way how to invest, or this is the best way to invest. No, you got to do this, or this is a new thing. And right now I feel like I think I know that there's overwhelmness of how to make money,
Yeah.
you know?
Yeah. Well, you know, everybody wants to hear and believe that there is a quick way to riches. That, you know, I mean, we all want to believe that. There are lucky way to riches. You can get lucky. But like we were talking earlier, success is usually a lot of hard work. And it's about having a dream and passion and about really providing a true customer value proposition. Like truly success. I'll get in investing in a second,
Hmm.
but truly successful businesses are those that over the long term just live to give their customers more and more value. Okay, I've got this great value proposition, either it's a good or a service. How can I make them even happier? How can I give them more value? And so we can grow together rather than companies, which happens more and more, unfortunately. Companies can sometimes say, well, how can I extract value from the customer? How can I increase the price of the product without increasing the value of the product and get them to still buy it, or pay the same price but diminish the value a little bit so they don't see or they don't know. And so a true customer value proposition is super important, hard work. And when it comes to investing, as I said, you can get lucky. And there are different investment styles, which makes your question very tricky. And for me, what makes a good investor, my investment style was, or our investment style was investing in high quality companies, companies that were providing that true customer value proposition, and businesses that also had a great corporate culture. And they wanted all the constituents of business, their business model to benefit. So not just the shareholders and the senior executives, but the employees, the suppliers, the community at large, and the customer. And the customer is number one in all this because out of all these six constituents, the customer is the only
Hmm.
one that pays, right?
Hmm.
And so I think to be successful as an investor, you really have to know who you are, first of all. Like, what is your personality? You need an investment style that's consistent with your own personality. Otherwise, you won't stick with it. It's too hard. Don't try to invest like somebody else. You can't invest like them if they're a different person. So, know who you are, have a real plan. What's my value added? Like, am I adding value here or not? Have a long term view. Don't get discouraged, obviously, by setbacks. And as a successful investor, you're going to make plenty of mistakes, and you're not going to outperform every year. And you might go a few years with out of underperformance. But if you have a plan and you know where it is you're trying to get to and you stick with it, then and you put in all the hard work and the hours, um, then you have a better chance of succeeding. There's no guarantee either with having done all that, but you can put the odds in your favor. And yeah, I would just be careful about all those who claim they have a surefire, surefire way of making a fortune in the stock market. I mean, first of all, if they did, why are they sharing it? Right? I wouldn't be. I'd keep it to myself because as soon as you share it, then everybody's doing it, and then that opportunity's gone because all the stuff that you would buy, all the prices would be bid up, and now it's no longer a good potential investment return. So
Yeah.
I would just be cautious.
Yeah, I think you hit a great point. I think what's everyone is focused on like gaining capital, money, 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 right?
Yeah,
And what the true what the I don't even know how to say this. What the true the most value thing is the value. That's where we're not connecting. I think
yeah.
what I've seen is a lot of selling, even in real estate, which I'm heavily involved with my wife. It's a lot of selling something, but not being capable of seeing the value in things.
That's exactly right. And I talk a lot about this in my book that many people don't differentiate between capital and money.
Mm,
So capital is what people produce on a daily basis, goods, services. And the more people that are creating capital, then the wealthier society is because there's more and more capital being produced. And then we exchange that capital by using money. So money is called the medium of exchange. It's the thing we use to exchange all the capital that's being produced. So what makes the world go round is not money. Money's very important,
yes.
but it's only there to exchange the real important stuff. That's the stuff that's being actually being produced and enriching our lives. And so my book is
Is
called
a capital offense.
Capital Offense: Why Some Benefit at Your Expense. And so the reason it's called capital offense. So the example I use is, let's say you make bikes and you make 10 bikes. You've got these 10 bikes. You have purchasing power now.
Mm,
It's your means of payment. You can use those bikes to go buy other things, right? So you might go to your neighbor, like, I got this bike. You want to exchange it for your snowblower or whatever, right? So you're able to obtain a snowblower because you created capital. You created a bike, and you and your neighbor are both better off, and it didn't come at the expense of anybody. You now have a snowblower, and you didn't screw anybody else, right? You
hmm
created capital that wasn't there. Now it's there. It's a bike. So let's say you make 10 bikes, and they're nice bikes, or like $1,000 each, and you sell them for $10,000, like $1,000 each. So you got $10,000 in your bank account. What that bank account is telling you is that you've got $10,000, but you really have 10 bikes stored up temporarily in that money. So money is a store of value. So you didn't spend your bikes right away, exchange them. You're storing them up in money for the time being until you're ready to spend that money. So you got $10,000, 10 bikes stored up in that money. But if before you get a chance to spend that money, the central bank doubles the money supply. When a central bank creates money out of thin air, it does just that. It doesn't create capital to obtain that money. So that money has no capital stored up in it. It just created it out of thin air. That money, that newly printed money, obtains capital as soon as that money goes into circulation by extracting capital from the rest of the money already in existence, i.e., your 10,000 bucks that's sitting in your bank account with 10 bikes stored up in it, the newly printed money extracts 5 bikes from your $10,000 and puts it into the newly printed money. That's how it gains value. So now your bank statement still says that you've got $10,000 in your bank account. So you think, oh, that's pretty good. But it only contains 5 bikes now instead of 10. And so now your $10,000 will only buy half of what it would have done before the central bank doubled the money supply. And that's why my book is called Capital Offense, because they take your capital without your permission.
And they print the money, and the money doesn't have value unless it's mixed with your money. Correct?
Exactly. Exactly.
Dang, that's insane.
It is. And it's been going on a long time. And this is not a, Dio, I should, emphasize that this is not a conspiracy theory. And
No,
it's
this is well established information, but
yeah,
it's when here's what I think. I think when you're focused on one thing, right? It's like a cat, and if you have one of those pointers things, those lasers, the cat just focus on that red dot,
yeah,
right?
yeah,
On that red dot. When you're just focused on that red dot, everything that's behind it's moving. You're unaware because you're so focused on that red dot.
exactly. That's a very good analogy, actually. And
Yeah.
and it's not a conspiracy, but and I would also emphasize that I don't believe that policymakers, deliberately got us to this situation of rampant wealth disparity, where it's so tough for the next generation to afford the sort of lifestyle that my generation was able to afford. It was good intentions. They thought that by printing money and driving stock prices higher and housing prices higher, that this would be good for everybody, that even those who didn't own those assets would benefit, as all the goodies would trickle down from those who owned assets to everybody else. Well, they didn't, and they won't. And the situation is getting worse, and people are getting angry, and the world is becoming increasingly divided. And I mean, there are other causes, but I think this is one of the main reasons why people are angry and why society is divided. So people understand that they're not benefiting like my generation did or like others are, and they're better educated than me, work just as hard, yet they can't afford a lifestyle, the same sort of lifestyle that I had.
Hmm.
And so they know they're getting screwed. They don't know how. It's hard to connect the dots, like we were talking about earlier, the financial jargon. And so then it becomes so you look for someone to blame. And
Yeah.
then it becomes very easy for Republicans to blame Democrats and Democrats to blame Republicans. Same thing here in Canada, as conservatives versus liberals. There are good people on both sides, but when you have a bad environment, it really brings out the worst in good people. And there are some bad people out there, don't get me wrong.
Hmm.
I believe most people are good people and want to do the right thing, but they're pissed, right?
I hear that. Yeah. I don't blame neither. I blame advertisers because if advertiser wasn't doing such a good damn job, people wouldn't want to buy things um they can't afford, right? Because I was reading recently uh Psychology of Money, right? I went back to it,
Oh yeah,
and it showed after the and I'm botching, I do apologize. After the Second World War, they came back, started building up credit, and everybody started buying things, right?
yeah,
Um, but in reality, they started buying things out of credit, but they could not repay that back. As little as uh, I don't the interest there were,
yeah,
the economy still wasn't at a place it could pay it back. So when you have companies, big companies good companies who are good at marketing and selling things you cannot afford. And the people's like, wow, I want to see myself just like this guy seeing himself with a watch or a car, right? I need that. Now they get themselves in debt.
Yeah. Yeah, no,
That that
definitely.
that that's just my my
Well,
my
yeah,
perspective.
you know, debt-fueled consumption is, not a sound long-term policy. There's nothing wrong with debt if you're going to buy a home or you're going to buy a car or, these are big outlays which take a long time to save up for. Uh,
Hmm.
or, if debt is being used for investment. So that investment, I'm not talking about consume, I'm talking more about corporations taking on debt and they invest that capital. It gives them now the wherewithal to pay the debt back. But if you're using debt for consumption, when you borrow the money, you consume it, that capital is gone,
There's no
right?
return.
There's no return. I mean, it's just, and to a large extent, policymakers have encouraged this sort of behavior. And it's because of the way GDP or gross domestic product is calculated. So GDP is all final spending in the economy. So it's consumers, businesses, government, and then they take net exports. But the bottom line is for GDP, about two-thirds of GDP of final spending is done by consumers. And so policymakers will use GDP, that number, that measure. If it's going up, then they think, well, we must be doing a great job running the economy because people are buying more stuff. And if GDP is going down, maybe we're doing a worse job. But if GDP is going up only because policymakers keep lowering interest rates so people can borrow more and more money to consume it rather than invest it, then that GDP growth is not sustainable because eventually people can't service any more debt and then they have to lower the interest rate again. So what happens is they lower the interest rate far below the optimal rate. It's called the natural rate of interest. This interest rate up here of people like yourself and millions of others who've got their own skin in the game, their own capital, making their own investment decisions, purchase decisions, they make the best capital allocation decision. And it results, when they're borrowing money or whatever, lending money, it results in this natural rate. And this is when the economy is the most productive. The most wealth is created at this interest rate. But policymakers keep driving the interest rate lower than that so people can borrow more and more to consume, to keep driving that GDP number. And this is one of the things that's got us into so much trouble because GDP is two-thirds of it is consumption. A lot of policymakers and economists think that consumption is the fount of all economic prosperity. No, it's the end game of all economic prosperity. That's what we achieve to consume more, but in order to do that, we have to save and invest. But in much of the investment is in things called intermediate goods, which is not captured in the GDP number. And so, sort of a long-winded way of agreeing with you, I guess.
No, no, it's I mean you broke it down perfectly. Yeah, yeah. Um, and that's and I'm sure that's public knowledge, but yet again, where do you start, right? Where do you look for, right? Like, unless you're going to your university or a college, you're seeking for this information, because this is a different language. This is
Yeah,
the numbers language. This is a business language, an investment language. And if you don't look for that, and you're not walking around with a dictionary that
yeah,
represents what you're doing,
yeah.
that help you understand the language, like
Well, it's hopeless,
it's
right? You,
difficult.
you you just get discouraged. You think, well,
Yeah.
I can never understand all this, and it'll be too much work, and I probably can't make a difference anyways. Yes, you can make a difference. Everybody can, and that's why I've written my book in very easy to understand terms, step by step. I start with just the concept of money. What is money? And I think three of the first four chapters are just talking about the concept of money. So people can understand exactly what it is. That's your foundation for the rest of the book. Then how are interest rates determined? Again, very slowly, step by step, lots of analogies, stories. So my wife has read the whole book. My daughters have read it. They all understand what's going on now, right? I mean, you have to commit yourself to reading the
Yeah.
book,
Discipline
obviously.
yourself. Yeah.
Yeah, but I try to have some fun with it as well. Yeah, yeah. So that, anyways, that's the whole, the goal of the book, to get people excited about the subject. I know it sounds kind of weird getting excited about economics, but I think people will.
Man, if I would have been lying to you if I've been for the last 3 months, I've been looking for somebody just to talk about economics, to explain what it is, but not just that, just to dive in, uh, not even dive in, just a surface. What is it? How can they understand it? And also, what is the state of the world when it comes to economics, right? And it's been a challenging because people, I feel like you got to be. Everyone wants to be agree with one another, but nobody really wants to push out a different narrative or be more realistic of how things are functioning.
Yeah. Yeah, and it's, this whole industry. I mean, so many of them, they just talk to in a way, like they're talking to other economists. They're sort of talking to each other, and which is fine. Um, but that's not going to change the world. And it's smart people like you with what you do and your viewers and listeners who are going to change the world. And one of the main issues is that because it's complicated or can be complicated, that and because economics is a social science rather than a natural science. So a natural science is like chemistry or physics, and they're like theories and they're formulas, and you can put the number, you can come out with an answer, a controlled experiment, control all the variables. But you can't do that with economics. It's a social science, more like psychology or psychiatry. And so there are different schools of thought with respect to what economics is and what the laws of economics are. And so it's very easy then to come up with theories that demonstrate that there is such thing as a free lunch, that you can have your cake and eat it too, that everybody gets a pony. No, these things are not true, right? But that's the first step, is making it real for people. Let's not kid ourselves about what it takes for an economy to function. Yes, I'm all for a welfare state. I'm all for helping people on hard times or if they're permanently sick or disabled. Yes, we, if we have like a very productive and wealthy economy, we can help these people and bring them along. And these are all great things, retirement, social security, whatever. But it doesn't come from government. Government doesn't produce anything. All the money that government gives to people first comes from the private, it's produced in the private sector, and the government gets its hands on it through taxation, through borrowing, or by printing money, taking your 5 bikes out of your $10,000 and giving it to somebody else, right?
Right.
So, government is very important. And there's a lot of people who work in government, very smart, want to make a difference, public service. But we just have to remember where it all comes from. It's the private sector. There should be no such term as government subsidies. They should be taxpayer subsidies because taxpayers are the ones who are paying those subsidies to whoever they're going to. And yeah, so just making sure that people know where it all comes from. Thomas Sowell is a famous economist, said that in economics, There are no solutions. There are only trade-offs. So, yeah, we can do this, but then that means we can't do that. Or we can do this, but now we can't do this. And so all we have to do is all come together and figure out what it is we want to do and at what expense and at whose expense. And this is not bad. This is just really good. We do it with full understanding. It's like, yes, I'm willing to pay for that, or no, I'm not. So let's have a discussion and then let's have an election and then, vote in the party that we think is going to do the best job allocating the capital according to our wishes and what we think is fair and not demonizing people. And then people get angry at the laws of economics because they can't have their cake and eat it too, because there is no free lunch. And some economists liken this to the absurdity of blaming gravity for plane crashes. Stupid gravity? No, you can't change it. It's not gravity's fault, right? And yeah, so I think it's just understanding and comprehension, and I think a lot of the anger would dissipate if people really understood how things work and rather than being kept in the dark.
I mean, but it's like I think more than ever we live in a world with fragile minds, right? We in order to discuss anything, we must uh acknowledge that.
Yeah.
Second, like you can't a lot of things that quote unquote are kept from us. It's also is that we don't have the wisdom, maturity, experience to understand and accept what things are, right? So like, the laws of economics. Somebody who's experienced and gone through the ringer, as one would say, you present them this, there's no way, there's just this. They're more likely to understand more and gravitate. Maybe you're right. Somebody who no experience, believes in no limitations, and just going through the ringer, not understanding that uh, there's a lesson to be learned, where it's not capable of grasping where you're putting them, where you are putting in front of them.
Well, you have to want to understand, right?
Boom, there you go.
And some people don't want to because they've benefited enormously from this system.
Yes.
And changing it will change their economic situation. And I get it. And there's a saying, uh, Upton Sinclair, he was a socialist back in the 1930s. He said that if somebody's income depends on them not understanding something, then don't expect them to understand it. They don't want to understand it if it's going to affect their income. So they just put the blockers on, bounces off, la 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 la, don't want to hear it. But much of what people are, much of their asset wealth comes at the expense of other people now. So, free market economy, the only way you are supposed to benefit is if you, in turn, have benefited somebody else. So, all your material wealth that you have is supposed to be a reflection of material wealth that others have out there because of you. Because you created capital, they created capital, and then you did a fair exchange. Well, here's my capital, and you exchange the capital that you produced, and now they've got that. So it didn't come at the expense of anybody else. But with the current monetary system and this fake wealth effect, which I call it, driving asset prices higher artificially, either stock prices or house prices, people benefit at the expense of somebody else. Those prices are rising in part, well, especially houses, but even stocks, in part, they're rising not because more capital is being created, it is, but not as much to justify how high stock prices have gone. And so we've been moving closer and closer or towards a benefit at the expense of somebody else system rather than the mutual benefit system. And in my book, I talk about it, and I liken it to a game of poker. So when you go for a game of poker, you know, all the players at the table, they're all playing poker. There's no capital being created at the table. It's just being redistributed. And at the end of the game, you have one winner and a bunch of losers,
Hmm.
which should sound very familiar to people in
Yeah.
terms of what's going on in our economy. You know, a few winners and a lot of losers. And, you know, when you look at the wealth disparity and how it's increased over the years, there should be wealth disparity, right? There should be wealth disparity based on your ability, your efforts, and also your success. Like if you're successful with your efforts, just because you have an ability and you put in the effort doesn't mean you're going to be successful. But you put all that, and if you're doing that better than others, then you should benefit more, but within reason, right? You don't want to discourage people from investing and innovation and R&D and trying to come up with something new and a world-beating product and then benefit from that. People should benefit from that, but they're only benefiting because other people are benefiting too,
Yeah.
right?
Well, yeah, I agree. I agree 100%. In your experience, where do you see the world's economy right now in present time?
So sorry, where's the world?
And your experience, sharing your expertise, your knowledge, the deciphering or depicting or providing your opinions on the world's financial right now, the economy in
Yeah.
present time. What's your opinion on it? How does it look like? Are we fragile? Is there potential anytime soon that things may normalize?
So, well, it depends what you mean by normalize, but with respect to your previous questions, yes, I think the world is very fragile in many ways. And in a way, it's like almost like a tinderbox, and the whole, you get this feeling the whole thing could just go up, you know,
Yeah,
angry, you know, protests and it's, I mean, it's scary. And 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 the amount of debt, like we were talking about earlier, you know, the US debt to GDP now is 120, 130% or something like that, growing every year
jeez.
because people have, you know, those who believe in the free lunch economy have convinced policy or politicians that debt and deficits don't matter. They matter a lot.
Yeah,
Uh, and you know, it doesn't have to be paid back, but you don't have to pay it all back and go down to zero. But in order to, when that debt matures, to pay it back, you're not going to be able to tax people enough to pay it back. And
mm.
so they will print money. Financial repression is what they call it. Like it's some sort of perfectly legitimate strategy. No, it's
Yeah,
not, because they are going to repress you financially in order
yeah,
to, and it won't even get them out of the mess. It'll just sort of sustain the mess. And, you know, there's a lot of tough decisions that need to be made. And these tough decisions have been around for decades. And this transcends politics, by the way. It's both parties, both sides of the aisle. Because if you try to do the right thing, which is painful, you'll get crucified by the opposition. You know, it's almost like political suicide
hmm,
to do the right thing. And it's because the people don't understand what's going on. They're told by policymakers that it is sustainable. Don't worry. It's not. So if people understand that it's not sustainable and it could lead to something, you know, pretty nasty down the road, that I do believe people will want to do the right thing, even if it means that they suffer through some pain, as long as they believe and trust that we will all be in this together. Not that, okay, I'm going to have to make sacrifices, but those at the top are they're going to be getting along
Mm,
fine and dandy. No, they have to see and believe and trust that we're all in this together. And and then with that understanding of what's going on and the path that we're on and what truly drives an economy forward, then people will demand the right actions from our policymakers. Our policymakers are good people. They're not bad people. They want to do the right thing. But if they do the right thing today, they'll be voted out of power. They won't last
yeah,
very long. So we have to demand the right things from them. There's an old saying that the people always get the government that they deserve, which means that, well, you voted them in, so now you're getting exactly what you deserve. Well, it's only the majority who won, right? Now, maybe the minority would have been worse, who knows? But even with the majority, you only get what you deserve if you actually understand what's going on. And today, I don't think that's the case. And so people are not getting the government that they deserve. Not that the government's bad. They believe in the fairy tale stuff too because it's fun and easier to believe in it. And so people will only get the government that they deserve when they understand what's going on and can then vote and demand accordingly. And um, and and Dio, I think we will get there. I think the pendulum has already started to come the other way in not believing in the something for nothing fairy tale. A lot of people still do believe in it, and there's a long way to go. But I do have great faith in people, and yeah, and my book is not a book of retribution. It's a book of understanding. Say, like here were the motivations,
hmm
the decision making, in my opinion, and why and how we got to this place, and what we need to do to eventually get out of it. And those who got us to this place, um, I think they could be very helpful in getting us out of it, as long as they admit that it was the wrong path. You know, if they're going to stick with the old ways and try and save
yeah,
the reputation, and and I'll show you, I'll do twice as much as I was doing before. That'll prove that I was right. That's what they always do, and it's like so childish and so harmful and
yeah,
destructive. You know,
yeah,
but we'll get there. I really believe that.
yeah. What are some things people could find on your blog? How can they find your blog? How can they subscribe to your blog?
Yeah, thank you. So I have a website. It's called Paddington Capital MGMT. So MGMT is short for management. Paddington Capital MGMT.com. And all my past blogs are there. I've got it in a post form. You can read it. And I also have an audio, so a podcast version. I'm putting interviews like this up there. I've got a summary of my book. And when you go to the website, you can put your email in, and you'll get notification when I post. It's usually on a Monday, and it's free. And so, yeah, you can read all the old stuff and all my ranting and raving, and I like to have fun with it. And yeah, and then my book, as we mentioned, is called Capital Offense: Why Some Benefit at Your Expense, and it's available online in the US on Amazon, Barnes and Noble, Thrift Books, and in Canada it's also on Amazon and Indigo, and in the UK, which was where it was first published, it's again Amazon, but also W.H. Smith and I think some other outlets.
Well, there you have, ladies and gentlemen. Paul, thank you so much. It's been an honor speaking with you. You must do this again whenever you want. You're free to come back and share and give an update on the world, a new book, or whatever you want to share. Doors are open here. Thank you so much for honoring us and coming on the show today.
Well, thank you. That's really kind of you to say, Dio, and I'd love to come back and talk more with you, and I've really enjoyed being on your show.
Thank you so much. Before you go, make sure you go follow him, subscribe to his newsletter, go check out his website, go purchase his book right now. It's out. And like and subscribe our YouTube channel to continue support these amazing individuals like Paul here. And also you want to support the show, buy me a coffee. Link on the description. Have a good night, guys. I'm out.